Good afternoon, good morning or good evening, depending on where you join us today. I'd like to welcome all the shareholders to the 2020 Wellard AGM, my third as the chairman of the company and second as executive chairman. Let me start by introducing everyone on this meeting. We have from the board, we have in Singapore, Mr. Philip Ecasius, in China, Mr. Kandaloo, and in Queensland, Mr. John Stevenson. Joining me here in the Perth office is Michael Silbert, the company secretary and general counsel. In Singapore, the chief financial officer, Mr. Paolo Triglia. And we also have Mr. Doug Craig, partner at PwC, joining us from his Perth office. Also here running the proceedings for this meeting online is Mr. Cameron Morse and Steve Selesky. As with last year, I'll provide a short chairman's address before providing more detailed information about the operations and finances of the company in my executive capacity, alongside the company's Chief Financial Officer, Mr. Paolo Triglia. For the investors reading this speech on the ASX platform, the notes provided on each slide in the accompanying presentation provide additional information or commentary on the information presented on the slide. As to the formalities of how this meeting is going to work, I just hand over to Michael to outline the AGM process and questions.
Yeah, good afternoon, everybody. You will have received your notice of meeting and there's a lot of information in there. This is our first online AGM, so bear with us if we need to make any changes or corrections as we go through. We have, and it's very important, we have facilitated the ability to ask questions at several points in the meeting. John will guide us through when those points are, essentially at the end of the operational and financial sections. We'll have a question break, and then we'll ask questions in respect of the different resolutions that are being put in respect of each one of them separately, if there are any questions. We have gone through all of the processes required to verify our attendees who are voting shareholders. And you should have received shareholders from us. And moments ago, you should have received an email, which is a separate process for the platform that you're viewing this meeting on. That email will allow you to conduct the ballot. And that voting is now actually available and open to you. So at any point, you can go to your email, either on your mobile or on your computer, and it will lead you through the process required to lodge the votes. Obviously, there's only a couple of them this afternoon. We shall keep that part pretty simple. I'll hand back to John and he can kick us all off.
I would like to start the meeting by remembering the officers and crew who lost their lives on board the livestock vessel Gulf Livestock 1 on that fateful day on the 2nd September this year. While we are all vigorous competitors in the livestock industry, the loss of crew, the cattle and the vessel affected everyone in the industry, and our hearts go out to the family and friends of those who lost their lives in the Sea of Japan that day. Many of the crew that were on board that vessel some of the crew on board that vessel had done many voyages with Wellard over the years. That event has only strengthened the resolve that the safety of the crew, livestock and vessel must be our number 1, 2 and 3 third priority. Moving to the purpose of today's AGM, I would like to start by saying that Wellard was incredibly pleased to record its maiden profit since listing on the ASX. Yes, we acknowledge that the profit was very modest, but there is more work to do, but it is a profit nevertheless. Management priorities in FY 2020 were to repair the company's balance sheet, grow our earnings, ensure the company operations were as efficient as possible, and manage the impacts of COVID-19 on our business and operations, which commenced affecting the operations from March onwards. I'll provide information on each of these in my presentation, as well as looking to the current year, FY 2021. I'll provide an outlook and management priorities for this current financial year, being to manage the business to achieve an acceptable return on assets and plan for future growth. I'll now move to the presentation. Wellard's balance sheet has gone from being a millstone. Hang on, you haven't caught up. Wellard's balance sheet has gone from being a millstone around our neck to providing the company with stability, resilience, and the ability to capitalise on opportunities as they present. By selling income-generating assets to reduce debts needs to be assessed carefully. Our net debt is now low and serviceable with the earnings profile from our retained ships. Looking at our most recent divestment, the MV Ocean Share, which is now called the MV Al Kuwait, was a fantastic and is a fantastic vessel. However, it completed just 19 voyages in the 4 years that we owned her. And if we obtained ownership of that vessel, it would be highly unlikely that we would have completed any further voyages in the 2020 year, and indeed through to the end of this calendar year would have been the same scenario. In addition to reducing debt levels, our debt maturity profile has shifted from a profile requiring substantial near-term balloon payments to a payment profile better aligned with our earnings. Wellard's noteholder debt has been fully repaid. Dealing with the noteholders during our debt restructure took up an inordinate amount of time of myself and the executive team, and that focus has now been directed towards running the business efficiently. Finally, Wellard was in breach of its financial covenants for every reporting period from the day it listed. So it is incredibly pleasing to myself and the rest of the board that we are now in full compliance with all remaining covenants under our current ship financing arrangements. Moving to the earnings growth and reducing volatility. Wellard completed its transition to becoming almost an exclusive chartering company in FY 2020, and that has now occurred in FY 21, with we fully expecting to be 100% charter business. Moving to a charter company, at least for the time being, removes some of the earnings volatility that trading cattle and or sheep has created for the business in the past. And given Australian cattle prices are now the highest in the world, it is not a move that we are regretting. Instead, we seek to maximise the revenue by allocating our ships to the most profitable routes available. On the cost side, we have consolidated a finance team in Singapore and outsourced the management and maintenance program to a professional ship maintenance company in Ashima. We do retain our export licenses, which we believe are valuable assets, but don't plan to use it in the immediate future. Finally, on FY 2020, a review of the operations. The delivery success on this side is crucially important to the Wellard board. We're absolutely conscious that our company and the industry in general must continue to ensure that mortality rates are low and animal welfare standards are the highest available. If they aren't, we risk losing the public support and with that the government support. Very pleasingly, Wellard had no reportable mortality incidences or SCAS breaches whilst it was trading in FY 2020, continuing our excellent record from FY 19. The Australian to Southeast Asian operations continue to form the backbone of our operations, with more than half the cattle that our vessels transporting originating from Australia and ending in this markets of Indonesia and Vietnam. China for the year was a growth market for Wellard and for the live export industry overall, and it continues to be in FY 21. For example, we delivered 52,000 breeders on 8 voyages there in the current financial or the FY 20 year compared to the 38,000 breeders on 6 voyages in FY 19. That trend has continued, albeit not all from Australia, and more cattle, breeding cattle are being sourced from New Zealand. The information on this slide is a snapshot of FY 2020. I will address the current market dynamic in a couple of slides. COVID-19. The demand side for live export has been relatively unaffected by COVID-19. The beef from most of our cattle we ship is for household consumption. It is not for high-end dining. So demand has not been negatively impacted by COVID-19. People basically still need to eat. On the supply side, however, COVID-19 continues to have both direct and indirect effects, adding difficulty and cost to our ship operations. They are not singly material, but incrementally and ongoing nature of the COVID-19 impacts have cumulative effects on our operations. As an example of these, due to COVID-19, we've had to manage significant challenges, including the regulatory burdens imposed by different quarantine and entry requirements in different ports around the world, and heavily restricted crew movements. Initially, we weren't able to complete any crew changes. However, subsequently, we completed some officer crew changes in the FY20 year, and crew changes out of the Philippines have just recently been completed in the preceding months of this financial year. Completing the dry dock for the Ocean Ute in China and Ocean Swagman in Singapore with government-imposed restrictions on movements also impacted our operations. Internationally and locally in Australia, COVID-19 has impacted shipping, with several non-Wellard ships being specifically delayed when crews have tested positive. Both of those occurred here in our home base of Fremantle. Wellard continues to exercise caution and conservatism in an effort to mitigate these ongoing COVID-19 risks. On the positive side from COVID-19, reduced international trade has depressed the market for shipping fuel and bunkers, which is one of our largest single variable cost items. At the beginning of calendar year 20, Wellard was paying in the region of $700 plus for the very low sulfur fuel oil that was mandated from the 1st of January this year. That price has dropped considerably, and although it has fluctuated from it or come up from its bottom of the market, our recent purchases are around the 440 mark, which provides cost savings to the company. It is not possible to quantify exactly the financial impact on COVID-19 on our operations. However, the incremental effect will impact the half-year results, along with other factors, including market volatility and high Australian cattle prices. Now moving to the slide where shareholders would be most focused on, the outlook. We've had a mixed start to FY21, which was in line. Q1 was in line with our budgets, remembering the planned Ocean Ute dry dock. However, it was a challenging October. At the risk of focusing too much on a single period, I think it is important to look at that period in more detail to give the shareholders on this call an understanding of what we faced in operation challenges on a month-to-month, day-to-day basis. When the Gulf Livestock 1 sank in September, the New Zealand government immediately ceased further livestock exports while it reviewed its regulations. At that time, Wellard had vessels chartered to go to New Zealand. MV Ocean Swagman and the MV Ocean Drover were to complete voyages following the Gulf Livestock 1 sinking. We managed to find new jobs for both vessels, one of which was further impacted by another large vessel, which would ordinarily be taking sheep to the Middle East. That ship was diverted to loading cattle for Vietnam in Townsville at a similar time. The reason for the diversion is basically the sheep market is very supply constrained in WA currently. This created a major cattle shortage in Townsville at the same time we were loading the Ocean Drover, with the effect that the Ocean Drover sailed half full, so it was a loss-making voyage. The planned dry dock of the MV Ocean Ute, which was originally forecast to be unavailable for only 50 days, has grew out to 81 days in total. The much longer time period was caused by COVID-19 operational impacts in the dry dock in Guangzhou and the decision that we made to apply additional stability measures following on from the Gulf Livestock 1 incident. We also, once completing the dry dock, the ballast voyage length caused by a crew change deviation that was made to the Philippines, given that some of the crew had been on board for over a year. Following the crew change, the slow steaming to Australia to ensure the 14-day quarantine ahead of arrival and ACCL inspection also caused a delay, because that journey could be done in a shorter time than the 14 days. Additional to the 14 days upon arriving here in Australia, the inspectors would not come on board until a complete COVID-19 test was completed for the crew, which added several more days to her out of action time. So the period for October has been very trying for the company. Had our response and that of our exporters who charter vessels not been as dynamic as it was and proactive, the total approximately US $2 million loss that we incurred would have been much higher. Fortunately, we were returned to normal in November, with cattle previously booked to be transported from New Zealand to China prior to the September-October suspension, now given the green light to sail, and all three of our ships have loaded there this month and on their way to China. Our ship bookings are solid to the end of February, which is usually the weakest period of the year, so there is positives in the business as well as the negatives. At a more macro level, Australian cattle are now the highest priced beef cattle in the world due to the herd rebuild following the drought-breaking Northern Australia. This has impacted on demand from Indonesia and Vietnam and is likely to continue to do so until the pricing comes into the more traditional levels. When that occurs is difficult for us to forecast. However, it is quite likely that the whole of 2021 calendar year prices will be at or near where they are and creating shortages of supply with the competing processors. As an example of this, in October 2020, live feeder and slaughter cattle exports from Australia totaled 74,000 head. The year prior to that was a figure of 104,000 head. To put that in perspective for you, that's a difference of 4 swagman equivalent voyages per month. September is also showing similar declines year on year. The Middle East sheep market, even after the cessation of the annual winter shipping suspension, remains extremely slow. This has caused, as I mentioned, the competitive vessels to look for alternative work rather than sit at anchor. The Turkey market has reopened to cattle from South America, which absorbs a large amount of shipping capacity and, if sustained, will assist freight rates. That market remains particularly volatile, with permits being issued, sometimes issued and then stopped, issued and then stopped. So the forecast there is very difficult for us to make. However, the South American to China live cattle trade, as the pricing of Australian breeding cattle has gone up considerably, exporters and importers are looking for alternative markets, and this has led to a second shipment being booked for one of our vessels for the first quarter of next year, where we'll be taking breeding cattle from South America to China. The focus for the business going forward for this year and for subsequent years of the board especially is achieving an acceptable return on assets. Wellard ships continue to attract demand from export charterers because of the excellent results they deliver with respect to both voyage performance and animal welfare. And it's included, I would stress at this point here, the voyage performance or ship safety is now front of mind following what happened with the Gulf Livestock One. There is no bigger incident that could occur in our industry than the sinking of a livestock ship fully loaded. However, the investment we make in our shipping infrastructure does come at a cost. It is unfortunate that various incidents around the world impact the entire live export trade, when the live trade is far from a homogeneous industry. Different companies in different countries have different standards. Some livestock vessels in the global fleet are modern purpose-built ships with state-of-the-art design, ventilation and livestock services, which shipping companies have spent in excess of 100 million Australian to construct. Other vessels in the global livestock fleet are older, 40 plus or even older than myself, which were bought and converted into livestock carriers at the end of their useful lives as cargo ships for potentially less than $5 million for the vessel and conversion. In some market, Wellard competes against these vessels, so we need to be nimble to position our vessels to make the most of these opportunities. It is contingent on Australian regulatory authorities to ensure shipping regulations reflect modern standards and society's expectations of those standards, preventing inferior vessels from transporting our livestock and undermining the reputation of the trade. And lifting our eyes towards planning for future growth. 1 in 3 cattle are exported from Australia depart on a Wellard ship, and our vessels largely operate out of Australia and New Zealand. It is our home patch and we'll continue to defend it. We're starting to assess the cost-benefit analysis of new builds due to the very long lead times involved. I say that extremely cautiously, as they're having sold 3 vessels to reduce our debt load over the years that I've been involved in the company. The board has zero appetite to debt fund 100% a new build or to commit to a spot charter scenario where there is no underlying commitment to take the ship over an extended period of time. But times are changing in the global shipping industry, and as a market leader in livestock shipping, as Wellard has always been, we need to be conscious of those changes and stay ahead of the game. We need to continue to take a leadership position, and if we can derive a competitive advantage from doing so. We are alert to opportunities in the Middle East, although this is a market in which we've only been semi-active in the last few years. COVID-19 has only elevated the food security concerns in this region of the world. As a colleague of mine has said, throw a rock in the Middle East at the moment, you'll hit a brand new sheep feedlot. However, the Australian sheep flock is historically low levels and is trending lower. Over the last 2 decades, the flock has decreased by 2/3. So we need to build supply to meet the demand. With the fall in wool prices this year, it is unlikely to entice too many farmers back into the sheep production game. An innovative supply arrangement different to the past is required if there's to be any conversion of this enormous opportunity that presents today. Now that's the review of the operations on a basis of the FY20 year gone and the FY21 year coming. I'll now hand over to Mr. Paolo Triglia, our CFO in the Singapore office, who looks indeed after looking after finance, also looks after the operation, logistics and marketing functions out of that office, who will assess Wellard's financial results for FY20. Paolo?
So thank you very much, John, and good afternoon to everyone. My part of the presentation will be most likely less interesting than John one, being a retrospective analysis of what already happened. However, I believe that financial year 2020 was quite an exciting year for the company. For sure, it was for the board and the management. It was certainly a year of transformation during which our company has made significant progress, which I have summarized in the 5 sections in the slide. The first one is a strategic realignment of the company resources with the current strategy that focuses on a high margin chartering activity. The second one is a linear structure of the group that has allowed another 52% reduction in the group overheads. The third one is a restored profitability thanks to a record high EBITDA of $23 million. We have a 92% debt reduction, which was the main factor that led to a more robust balance sheet and to a positive working capital position. And the last one, a better cash conversion ratio from the chartering activity. So next slide, please. So the decision to suspend the trading activity and focus on the high margin chartering activity has been the main reason for the fall in our revenue, which decreased by 62.7% to $87 million. However, this transition allowed Wellard to optimize the contribution of people and assets and to move toward a linear organization able to create more value using fewer resources than before. The external charter revenue increased by 60.5% to $83.3 million and constitutes now 95% of our total revenue. And in spite of the decrease in our total revenue, the strategic move toward external charter allowed the gross profit margin to almost double from 16.5% to 32%. And we believe that this factor, with our fixed cost under control, should allow a steady profitability in the near future. This was not a simple transition, considering that traditionally our fleet of livestock vessel was predominantly utilized for our own cargo, whilst now our entire shipping capacity is absorbed by external chartering. We had therefore to work very hard to capture a larger share of the existing market by attracting our competitors' customer, relying on our good reputation on quality and be able to deliver a consistent, reliable and value for money service for all of them. Next slide, please. So as already mentioned by our chairman, our constant effort to cut the overhead has continued to deliver positive results and achieve another $12 million savings in financial year 2020, with the G&A expenses that reduced from $23 million of financial year 19 to the $11 million recorded in financial year 20. The biggest saving was once again our labor expenses that in financial year 2020 recorded the single largest reduction, and decreased by $4.6 million compared to the previous year. This further staff reduction was obtained thanks to the relocation of the group finance function to Singapore, and after the sale of the Ocean Shearer, the outsourcing of the technical management of our vessel to an external manager, because now with only 3 vessels and internal management became inefficient and not economical. Other significant savings were achieved on office costs, consultancy, travel expenses, and many other items. As I pointed out in the slide, the 52% year-on-year decrease represented a record high reduction of 79% or $42 million over a 5-year period. However, this will not be the arrival point, I would say, as we expect our overhead to reduce further and settle just below $8 million in financial year 2021. So next slide, please. Profitability. The group EBITDA increased by 94% to $23 million, thanks to the chartering activity with higher marginality and a lower cost of the structure. We are happy that this financial year, the EBITDA has continued this positive trend of the last 3 financial years, and that in financial year 2020, we actually recorded the highest EBITDA since Wellard was listed on the ASX. The operating profit margin increased substantially from 5 to 27%, showing that now a larger portion of our revenue is transformed into operating income. The fluctuation of Australian dollar versus the US dollar was more contained during the financial year 2020. However, we still recorded $1.5 million in exchange losses. After the sale of our non-core asset, depreciation and amortization expenses decrease of about 19% from $16 to $13 million. The financial cost reduced by, let's say, only 8% in financial year 2020, but we need to consider that the total $10 million that we have in our financial include extraordinary items of more than $4 million related to the early repayment of the Intesa loan and the modification of the finance lease of the Ocean Youth and the Ocean Rover. So even if we had to include these one-off items, the interest coverage ratio doubled from 1.1 times to 2.2 times in financial year 2020. And finally, and for the first time since listing, as John mentioned before, Wellard reported a small, but in any event, a profitable after tax of $300,000, which is indeed not satisfactory, but a positive sign for the future. Next slide, please. So coming to the balance sheet, the most important thing is, of course, the $100 million reduction in our net debt, which is the result of a 5 years long debt restructuring. At the end of June 2020, Wellard has a net debt position of about $9 million. And thanks to the full repayment of the Intesa loan and the full redemption of Wellard convertible notes, for the first time, we have no covenant breaches. At the end of the financial year, total debt represented 30% of the group funding. In June 2019, it was 67%. And the ship debt represent 38% of the book value of our vessel, compared to 57% of June 2020. The debt reduction led also to a positive working capital position of 3 million Australian dollar with a more robust balance sheet. Next and the last slide, please. So I want to complete this short presentation talking about our cash flow. The decrease in the trading activity and the disposal of the Ocean Shearer, of course, had an impact on the amount of cash generated by the operating activity. The $21 million generated in financial year 2020 was $10 million less than in financial year 2019. Nonetheless, the cash conversion ratio increased from 9 to 16% in the current financial year, showing that the chartering activity can generate more cash out of its sales revenue. Finally, during financial year 20, Wellard generated $11 million net increase in cash and ended the 2020 financial year with a total of $16.8 million in cash and cash equivalent. This basically concludes this financial review, and I thank you all for your attention, and I will now hand back to Mr. Klepek, who will run the formal matters for resolution at this meeting. Thank you very much.
Thank you, Paolo. We'll now address questions, and we have a series of questions that we've received already, which we will, Cameron will read out and I'll provide answers for. And we also provide opportunity to ask further questions. And if you note the instructions that are on the screen, that will give you the details of how to ask the questions, either by text or by audio questions. Given some of the questions received, we will answer most of the questions, but we'll leave some to after the resolutions to answer the balance, because one shareholder's sent in quite a few questions. So we'll break it up a bit to keep the meeting going. So Cameron, questions we received prior to the meeting?
Thanks, John. The first question is from shareholder Mr. or Mrs. R. Wilkins. Given the going concern doubt contained in the annual report, can Wellard please confirm that there is no intention of making an equity raising during FY21?
A good chairman will never rule in or out certain financial transactions. You can never say never, because circumstances do always change. However, I can confirm that due to the strength of our balance sheet, including a healthy cash position, there is no current intention to conduct any equity raisings whatsoever.
Second question was, I applaud the improvements made in FY20, but the $0.2 million profit includes a one-off gain of $7.9 million on the Sri Lanka project. Given this, can Wellard reasonably expect to make an NPAT or a positive NPAT in FY21?
Mr. Wilkins, you are correct in noting our FY 2020 profit, and previous results as well for that matter, are impacted by various one-off gains and losses, including the Sri Lanka contract in FY 2020. I'm not going to make predictions about profits or losses in the current financial year, because that would be akin to giving guidance, which we are not going to do. I would note, however, that Wellard has recorded operating profits in the past half years which haven't been impacted by one-offs. The market is lumpy at present, as I detailed in my presentation. There are bright spots, but there are also challenges, and our target is to achieve an acceptable return on our assets, which I also addressed in my outlook. I'm glad to say we've been able to fix our balance sheet so we can weather any hiccups that occur or challenges that occur along the way, and better match our earnings profile to our small remaining debt repayments.
And the last question from that shareholder for now, the figures for gross profit, EBITDA, EBIT, etc., appear to include the $7.9 million Sri Lanka gain, which, while desirable, is a one-off. Without that, all the FY20 profit margins would have been much lower, including the crucial interest coverage ratio. Please confirm.
I've already covered part of that in just answered the previous question, but I think the important point to note here is in the annual report, the 7.9 million kicks in after the gross profit and gross margin line, not before it. So that year-on-year comparison and projections forward remains the same. With respect to the interest coverage ratio, yes, it has made the ratio better, just as one-off costs have made it worse in the past. I can confirm that without one-off impact, Wellard would still be compliant with its debt covenants.
The next three questions come from shareholder Mr. Alan Chen, and I hope I pronounced your Christian name correct, Mr. Chen. In FY 2020, in the first half of FY 2020, the Wellard profit margin was 36.3%. But for the second half, the gross profit margin was only 26%. What changed given Wellard was doing the same charter business?
Well, the gross profit in the second half of FY20 was affected by the 2 months dry dock for the Swagman to carry out its required survey, and by the pre-delivery voyage of the Shearer to the new owner, which impacted the operations, but was effectively part of the sale of that ship.
Second question, China has a high demand for breeder cattle in the recent 12 months. Why can't Wellard trade cattle instead of chartering vessels to other exporters who can trade cattle?
It's the board's view that it's strategically better or preferred for Wellard to be a charter vessel rather than a trader of cattle presently. That may change, but if we would do that, we would change from being a supplier of choice to some of our exporters at the moment to a competitor. So that would require careful consideration before doing.
And the final question from Mr. Chen, which will come to the remainder of his questions at the conclusion. In 2020, the Ocean Swagman was in dry dock for more than 2 months in Singapore, and the Ocean Ute was also in dock for more than 2 months in China. How often do our boats enter the dry dock? And when will the Ocean Drover enter dry dock, and will it spend 2 months there?
All of the ships, and not just ours, the ships of any owner, are subject to periodical surveys in accordance with the requirements of the class in order to verify the whole machinery and equipment are in a satisfactory condition and in compliance with the standards that are required by these regulatory authorities. Some of these surveys, the intermediate and special surveys, require the vessel be put in a dry condition in order to inspect it. And amongst other things, the whole bottom, the propeller and the rudders. These surveys are carried out at prescribed intervals of approximately 2.5 years with applicable time windows to allow the vessel to complete its commercial commitments either side of the dry dock. The Ocean Drover is our next vessel scheduled to enter dry dock in February next year and will approximately spend a month there.
Thanks, John. I'll move to questions that have been submitted while the meeting's been in progress. I think you've answered the first one, but I'll ask it anyway from Cameron Morgan. Hi, John. Given the US $2 million loss to the end of October, do you expect the first half of FY21 to be profitable based on the current solid forward bookings until February 2021?
Thanks for your question, Campbell. As I've mentioned to an answer to the previous shareholders' questions, we're not going to give guidance as such. As example I gave during the presentation, the Gulf Livestock One is a huge impact on the industry. It's equivalent to COVID-19 in a small scale for us. A market closes as you've got ships on the way to the market. So the inherent nature of this business makes it very difficult to give a forecast guidance going forward, and we'd be always coming backwards and forwards, updating the downgrading, etc., based on whatever occurs on an individual month. So although I would like to provide further detail around that, it's inherently unsuitable for the nature of the business that we have.
And the final question submitted in writing. Wellard has previously been vocal about the industry implementing an age limit on livestock vessels. With several of the company's vessels reaching the aforementioned age limit, what is the plan for dealing with an aging fleet?
I have mentioned, looking forward, raising the eyes above the current operations, our cost benefit analysis of future new builds. I'm not going to address individual ships. Our ships have considerable life left before they reach age limits for AMSA purposes. So we'll continue with the current fleet, but we also have an eye on the future that will allow new ships to enter the fleet.
Thanks, John. No one has raised their hand to indicate that they want to submit a question verbally, so we can move on to the formal part of the meeting.
I'll hand over to Michael at this point, who will manage the formal part of the meeting, the two resolutions that we have, being the remuneration report and election of Mr. Philip Classius as director. Michael?
Thanks, John. Thanks everybody for your patience. This is, as I said, a new experience for us and could be for you. It's a fairly simple and straightforward agenda. The 3 items, Steve, next slide, are on your screen. The first is to receive the annual report. The second is a vote on the remuneration report. And the third is the re-election of Mr. Classius, who resigns by rotation. We've talked about how the questions have been received, and we have referred previously to the notice of meeting. Steve, could you use that report? The only point that I would say is unless anybody has any objection, which there never is, we'll take the notice of annual general meeting having been distributed to also be taken as read. So I think we can proceed forward from that. Again, as we've set out in great detail in our notice of meeting, we have decided to call a poll, which we have done every year as a public company. It is in fact in the guidance notes issued by ASIC for online meetings that these meetings should have their business conducted by poll. This page, I don't know that I need to go into great detail, but does set out the basis for the calling of the poll. You have been verified to vote, as I say, and by now you should certainly have received your emails. If you're, for instance, online, if you're on a mobile phone, you will have received a very easy email to respond to, which allows you to vote by clicking in certain election boxes. You should be able to find your way through that as we go through this process. If you're on a normal laptop, the same kind of approach will be taken. We'll be voting on all items throughout rather than requiring you to vote and submit one by one. So we'll discuss each resolution, excuse me, and keep moving through. When you have finished, you can return your ballot forms at any time prior to the end of the meeting. Please understand that once you have submitted that form, it is irrevocable. You cannot change your vote once it's been submitted. So make sure you're absolutely clear as to how you're voting. There is a process by which you verify that vote, both on your mobile and by text before you completely submit it. But once you have finalised that submission, it is a lodged vote. And then at the end of the meeting, the chairman will guide us through how we close the poll, and after the meeting we'll release those results. John, if you're happy, would you like me to move to the agenda item number 1?
Please.
The first agenda item is the receipt of Wellard's 30 June 2020 annual report, and the text of that agenda item is displayed on the screen, and this is not a voting item. I will point out that there was a typo in our notice of meeting, and I apologise for that. It did talk about the year ended 30 June 2019. However, the text in the AGM made it absolutely clear that this was in relation to the annual report for year ended 30 June 2020. And Doug Craig also pointed out, and he's quite right, that we incorrectly described his employer as Pricewaterhouse, as KPMG when it's PricewaterhouseCoopers. I apologise for that, but again, it's very clear who our auditor is. So at this point, we would ask if there's any discussion or questions relating specifically to this agenda item. As we said, we have received many questions arising from the substance of the annual report itself, and you're welcome at this point to also ask any question of our auditors.
Michael, as of the moment, no one's raised their hand. As with previous with the questions, if anyone would like to ask an audio question, please raise your hand on using the tool on the screen.
Okay.
As there's none, I suggest we do have, no, they've withdrawn.
Just finding where that particular button is.
Trigger finger.
There will be an opportunity for questions at the end if something does occur to you as we go through this. So I thank you for that. I think we will move through to the actual first resolution of the meeting. Please serve. And this next resolution again is displayed on the screen in front of you. This is a voting item, and we'll display in 1 second the proxies received in respect of this resolution, which will appear on the next slide. You'll see from the proxies that there is overwhelming support for this resolution. We thank you for that. And I note that voting prohibitions do apply to this resolution. So if you are a KMP or key management personnel and have voted on this resolution, your vote will be discounted. However, the proxies have been treated in such a way to remove any KMP votes, and that is where the polling stands at this point. Again, it's a point at which we can ask for any discussion or any questions in relation to the resolution in relation to the remuneration report.
John, Michael, there are no questions.
All right, thank you for that. And at this point, we would move on to the next resolution. And that is, again, it's a very standard resolution, and this year it's the re-election of Mr. Clausius. You can see again on the screen that resolution appearing before you. The way it works is simply that in order of their length of service, our directors every 3 years put themselves up for re-election and allow our shareholders to consider and vote in favour of their re-election. And that's what's happening now. We'll show you the proxies received for that resolution. And again, they are even more overwhelmingly in favour of Mr. Clausius's re-election. We did receive one question, and I'd ask Cam to read that out, and we can respond in respect to that question.
Okay, the question is from shareholder Mr. Alan Chen. Non-executive director Philip Clausius has been a director since Wellard listed on the ASX. During his tenure, Wellard lost the Ocean Outback, Ocean Swagman and Ocean Kelpie, spent $70 million building the Ocean Shearer, which has now been sold, and lost hundreds of millions. Mr. Clausius is in the position for the longest time compared with the other board members. Should he be responsible for something?
Yeah, I want to correct some of the statements that have been made there because they're incorrect. When Philip joined the board at listing, the Ocean Shearer was almost fully complete. The contract for the Ocean Kelpie had already been signed and work had commenced, and the debt which caused Wellard to sell the Swagman and the Outback had already been accrued. So instead of getting Wellard into the position it found itself in, Philip has been instrumental in helping fix many of the issues that the company has faced. Philip's shipping experience is extremely valuable to the board of directors, and we are given we are a shipping company, I'm pleased to see the level of support that he's received from shareholders in the votes today.
Mr. Chen may have a subsequent audio question. We'll open his line now. Mr. Chen, if you've got another question, please ask it. Otherwise, you can withdraw your hand if it's already been asked. Go ahead, please.
We're not hearing you if you are asking a question online. Your microphone may or may not be on.
It says it is self-muted.
You need to turn your mic on, Mr. Chen.
Okay, we might move on to the next question then. Mr. Chen's got a number of questions that we'll also answer at the end of the meeting. The next question, Steve, if you'd like to open the mic of Jacob Zhu. Jacob, please ask your question.
Again, if you could please unmute your microphone.
I guess if you are having trouble with your own microphone, you can type the question in as well, and we can come back to it. While we're doing that, I remind everybody that the polling is open for all of these resolutions, and that in respect of the open votes, they are cast by the chairman of the meeting in favour of the resolution. So when you see the proxies, for instance, on the screen, that 0.22% will be added to the 99.28%.
Okay, doesn't appear like Mr. Zhu wants to ask a verbal question. So John, I'll hand back to you.
Yeah, so now we have the, before I declare the poll closed, we have the final opportunity to ask any further questions. Cameron, would you like to ask the questions that Mr. Chen previously provided?
Before I do that, there's some questions from back again from Wilkins.
Okay.
Next question is there still a balloon payment on the extended Retura loans, or will they amortise gradually to zero?
Yes, there are two balloon payments due at the end of December 2021. One for around 4 million on the Drover and one for just under $1 million on the Ute. These are, note, substantially less than the close to 20 million US. All those numbers I quoted there are US dollars as well. They're substantially less than the 19 million odd that was due under the preceding finance arrangements that were due in December last year.
Next question is approximately what level of revenue might be achievable if the fleet is fully utilised throughout FY21?
Yeah, look, given, as I've mentioned to the answer to previous questions on profit guidance, revenue guidance is a similar category. Given the inherent volatility of the business, we will not provide that level of granularity for the half year or full year FY21. Note that we won't have this year. We don't have 100% utilisation of either the Ocean Ute because of the dry dock, which I discussed, and the forthcoming dry dock for the Ocean Drover.
Next question from the same shareholder. Have all the Balzerini shares now passed through the market, or do they have the potential to disrupt the share market when his financiers sell them?
My understanding is the finances were largely personal rather than traditional finance institutions. Those shares have been distributed for many months now, and creditors who I have spoken to, they've indicated they plan to be long-term shareholders of the Wellard shares. However, I haven't spoken to all of them, so I can't answer on behalf of a shareholder's intentions or what they wish to do.
And the last question from this shareholder, page 37 of your annual report says no short-term incentive plan was implemented in FY20, but this appears to be contradicted on page 39 by STI payments to Messrs Stevenson and Triglav. Please clarify.
The statement is correct. The short-term incentive payment made to Mr Stevenson when he was CFO of the company and Paolo Triglia were discretionary in nature, given the FY 2020 meeting specific milestones associated with the balance sheet restructure of the company. So there was no STPI formal plan in 2020 nor an LTIP. However, an STIP plan linked to the EBITDA of the business is in place for FY21 for the key executives responsible.
Thanks, John. I'll now move to some more questions from Mr Chen. From our annual report in 2020, it said Wellard is seeking a refund from the Ocean Kelpie and it was waiting for an award on preliminary issues and the decision was expected imminently. Please give shareholders more details of the refund.
Okay, the key word in your question, Mr Chen, is preliminary. The good news is that we received a positive ruling from the arbitrator in London just recently that Wellard was within its rights to cancel the Kelpie shipbuilding contract, and therefore the shipyard should be repaying progress payments made by Wellard for activating the refund guarantees. Unfortunately, that's the beginning and not the end of this situation, but it's a major positive nevertheless. We have to now litigate against the guarantor, the Croatian bank standing behind the shipyard, because the shipyard itself, Uljanik, has gone into liquidation and has no funds to pay the order that has been made. This was always known as the process. First stage was against the shipbuilder, second stage is against the issue of the refund guarantee in the Croatian National Bank. So we're it's still alive in the process. We have rulings in our favour, but it is a long process which we expect the other side will defend or take action. So it will run its course, but so far so good.
Okay, another question from Mr. Chairman. About the class action for the ban on the live exports to Indonesia in 2011, Wellard is a member of the class action and was the largest active exporter at this time. How much does Wellard want the federal government to pay?
Wellard's a member amongst others of the action, and there's a lot of work to do to finalise the claim concerned. We don't have a clear view right now of how much we might claim, however, shareholders should not expect a huge windfall to Wellard out of this, because whenever you do a situation like this, you have to calculate your own losses and whether you're able to redeploy vessels, etc., in other markets. So you can only claim for what you have lost in the circumstances involved. So we're working through that process now. We will be claiming. However, do not expect a very large amount from this.
A question from the same shareholder. Wellard has moved to new offices in Fremantle. How much rent does the company pay for the new office compared with the office previously leased from Maro's family?
I'm not going to provide individual line items down to how much we pay for a building rental lease. However, to say that it's substantially less than what it was. The office here is substantially smaller. There are only 5 staff here in the office, and this new office has been sized to suit.
And the final question we received before the meeting from the shareholder was, if Wellard has enough cash, like for example 25 million US in future for the buyback of the Ocean Swagman, or to pay off debt, or to hold on, or to keep in hand to develop our business, which one will be a priority?
I'm not going to lock in one way or the other, Mr. Chen, one pathway or another, other than to say these strategic options and paths forward are under constant review by the board.
Thanks, John. I'll now move to questions that we have received during the meeting. I'll start with one from Stephen Taylor. John, I understand that October trading was a problem, approximately $2 million if I heard you correctly, but can you please confirm again the trading result for Q1?
No, Q1 was in line with our budget. So all we'll say there is it was in line with the budget for reasons I discussed in the presentation. October was not. However, November's returned to normality. The ships are utilised and have bookings out to the end of February.
Thanks, John. I've now got the last 5 questions from Mr. Chen.
5 more, Mr. Chen, you're on a roll.
How much?
Should be a record for an AGM.
How much revenue did, actually, you've already answered that question. How much revenue did Wellard make at Q1? I think you're pretty clear there. So I'll move to the next question. The share price is now under 7 cents. Wellard has some cash on hand. Has the board considered buying back shares on the market now to show some confidence to shareholders?
That's an option. The management of finances considers all options, and that's one option that has been discussed by the board in the past. But there is no current intention to do so, especially given what has occurred with the Gulf Livestock 1. As I mentioned in the presentation, I can't underestimate the magnitude of that on the business. Unlike other businesses all around the world that have been given government handouts, when our market closed at the drop of a hat, we weren't on the end of a job keeper, job seeker, job whatever. There was no beef keeper payments for us.
Another one from Mr. Chen. The money Wellard makes with rising revenue is in US dollars. The expenses that it has are in both US and Australia. If the US dollar depreciates compared with the Australian dollar in future, will that be a good or a bad thing for Wellard?
Now, we're going to remove the fluctuations of the forex on the business by reporting in the currency of the US dollar. So going forward, all our results will be in the US dollar. We only have a small amount. Virtually our Perth office is in Australian dollars. All other expenses are either in Singapore dollars or US dollars. All the shipping costs, the charter costs, the revenue, and all the variable costs are all US dollars. The loans are in US dollars. Hence, for the very reason your question, we're going to remove this forex fluctuations on the business by reporting in US dollars.
And John, that completes the questions submitted by shareholders.
Thank you. On that note, there being no further questions, it's gone into sleep mode, my PC, hang on.
We should
the poll, I call, do we have to give a 30 seconds or something before we close the poll?
Yeah, we don't actually have to, and I would suggest, looking at the screen, quite a few shareholders haven't yet. They've probably been paying attention to the meeting, and we thank you for that. But maybe between 10 and 15 minutes after the meeting, we will keep the polls open.
Rather than leave it open, it's 2:59 Perth time, so let's make it 3:10.
Okay.
So convert that to wherever you are in the world. 3:10 Australian Western Standard Time will close the poll.
And as I say, we can see that people have or have not voted. If you're having problems with that, please, you can email us. I think you can email back to the
AGM at Wellard.
yeah, you can email back to the agm@wellard.com.au address, and we can try and sort you out.
So those results will be, once completed and tabulated, will be put on the ASX platform later this afternoon. So there being no further business, Michael, nothing else on the formal side of things?
No, thank you.
Thank you, Michael. Thank you, the rest of the board and PwC, Mr. Doug Craig for joining the meeting as well. And in closing, I would like to thank our shareholders for their continued support of the company. There are both opportunities and challenges for the company in the short term, medium term and long term. We are over in the fortunate position currently that Wellard's vessels are the ships of choice when exporters and importers need medium or livestock carriers. And very importantly, unlike the past, our balance sheet is very robust and our cash position is strong. On that note, good evening, good afternoon, good evening, good afternoon, good morning, goodbye. Until next year.
Thank you.
Thank you.